Hello and welcome to AI Market News by LM. Well, what a night. The markets just got hit by an absolute shockwave. We saw a massive, and I mean massive, plunge in crude oil and at the same time, a huge relief rally in stocks. So the big question on everyone's mind is, why? Why did this happen? And could oil prices really be heading for $80 a barrel? Let's get into it. Just take a look at this number. Whoa. West Texas Intermediate, WTI crude, it collapsed by over 16%. 16%. Brent futures, which is the international benchmark, also just plummeted, falling below that supercritical $100 mark for the first time in weeks. This wasn't just some little dip, folks. This was an absolute freefall, one of the biggest we've seen in years. So, a move this dramatic, this sudden, it just doesn't happen in a vacuum, right? It really begs the question that's on every single trader's mind right now. What was the catalyst? What on earth just flipped the script overnight? And the answer, it turns out, is a major geopolitical breakthrough, a development that pretty much instantly vaporized that risk premium that had been baked into energy prices for the last 6 weeks.
So breaking news reports have confirmed it. The US and Iran have agreed to a temporary 2-week truce. Now, here's the crucial part, the catch, if you will. This deal is entirely conditional. It all, and I mean all, hinges on the immediate and safe reopening of the Strait of Hormuz. The world's most important oil choke point, which has been shut down for weeks now.
This truce, it effectively puts a pause on a conflict that has sent these huge shockwaves through the global economy. For weeks, the disruption to energy supplies, the constant threat of escalation, it had markets totally on edge. This ceasefire, even if it's just a temporary thing, has completely changed that short-term outlook. The reaction was just immediate. And believe me, it wasn't just about oil. We saw a massive risk-on move that rippled across global financial markets. It was like a collective sigh of relief from investors all around the world. And what's so fascinating here is just how interconnected everything is. You see oil plunging because that war risk premium just vanished. So what happens next? Bam! European stock futures like the Eurostoxx 50 surge over 5%. And we saw some powerful gains in the S&P 500 and NASDAQ futures too. At the same time, bond yields topped as those inflation fears eased up, which immediately brought back bets on a Fed rate cut. And this, of course, hit the currency markets, with the US dollar getting weaker as riskier currencies like the euro suddenly looked a lot more appealing. But, and there's always a but, isn't there? As fast as this rally started, a bit of caution is already starting to creep back in. Everyone is asking the exact same thing. Is this piece for real, or is it just a temporary break in the clouds? The word fragile is on every single analyst's lips right now. And that brings us to this really key piece of commentary from the input sources. One analyst points out that getting oil prices back down below $80 a barrel, well, that would take something truly tremendous. The underlying issues haven't just disappeared overnight. Experts are pointing out that even if the Strait of Hormuz reopens this very second, just normalizing the physical supply chain, we're talking restarting wells, getting ships back in position, restocking refineries, that whole process could take months. So, this really breaks it down into two very clear scenarios, two paths forward. The bull case for oil is pretty simple. The 2-week ceasefire fails, the strait remains a choke point, the supply crunch comes roaring back, and prices shoot right back up. The bear case, well, that's that the peace actually holds, shipping lanes get back to normal, and all that oil starts flowing back to the market, pushing prices down even further. The entire market is basically balanced on this knife's edge right now. Okay, so with these two opposing forces pushing and pulling, what's the broader feeling, the sentiment in the markets? And what does it all mean for that big question we started with? Are we really heading back to $80 oil? The Fear and Greed Index gives us a great little snapshot of investor sentiment. And we've seen a really clear shift away from that extreme fear that was dominating everything during the conflict. But we're not exactly in greed territory yet. The market has moved towards neutral, which reflects this sense of, well, cautious optimism. Traders are relieved, for sure, but they also know that a single negative headline could reverse this whole rally in a heartbeat. Okay, so what's next? With the immediate geopolitical risk kind of on pause for a moment, the market's focus is snapping right back to where it was before all this started: economic data and central bank policy. Now that those fears of an oil-driven inflation spike have cooled down, market expectations for the Federal Reserve have pretty much solidified. According to the CME FedWatch tool, traders are now pricing in a 98.4% probability that the Fed is going to hold interest rates steady at its next meeting. that kind of certainty is a huge reason why stocks have rallied so hard. So what should we be watching on the calendar? Well, according to investing.com, we've got several high-impact events this week. On Wednesday in the US, the weekly crude oil inventories report at 7:30 a.m. is going to be critical for seeing if supply is actually starting to normalize. Then, later that day at 11 a.m., the FOMC meeting minutes will give us a peek into the Fed's thinking from before this ceasefire happened. These are the data points that are probably going to drive the market's next big move. And that leaves us with the ultimate question. After weeks of turmoil, we've got this moment of calm. But is this the beginning of a real market recovery, a genuine turning point driven by peace? Or is it just the eye of the storm, a temporary pause before the next wave of volatility hits? Thanks for watching. Don't forget to like and subscribe. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.